thank you very much for joining us on what I think has to be the nicest day on record in 2021 so far. I'm very excited to welcome you to our latest Asset Manager Showcase, sharing some insightful and timely information from our friends at the Downing Street Group. I'm certainly not the one who's going to be doing all the talking today. I'd like to introduce you to Marc Canale, partner and COO at Downing Street. Marc, welcome, and thank you very much for joining us today.
Thanks very much, Eric. I appreciate it. I appreciate you guys providing us this platform, and I look forward to it.
My pleasure. And maybe a couple of quick small housekeeping items before we get going, but we're here for 30 minutes sharp. We're very happy to take questions in the Q&A box on your screen throughout the discussion. Send them through. I'll work them in. If not, if it doesn't fit with where we're chatting, I'll make sure we get some time to answer them at the end. With that, Marc, let's get a few quick things out of the way. You know, we've heard of you before. I see you guys all over LinkedIn and social media and chatting with clients, but perhaps some of the folks in our audience have not. You've got a few OM funds available on DealSquare. Ticker is DSPMF. To start us off, why don't you give us a bit of a view on the organization, your history, and the credentials of the Downing Street Group?
Okay, happy to do so. So for starters, we've been around since 1986. My two partners founded the firm together 10 years ago. Prior to joining them, I spent time in Shanghai and Singapore working for real estate service providers. Our business can be summarized, there's two sides of our business. We are first mortgage lenders, and we are owners of real estate, buyers of real estate. On the buy side, we are active in land development, residential ground-up development, and the refurbishment of office and industrial assets, primarily in Toronto for that last investment thesis. On the lending side, we are a first mortgage lender to the real estate development community, other owners of real estate, and about a year and a half ago, we launched a prior to the launching of the mortgage fund, we were a syndicated mortgage lender. Then we obtained our exempt market dealer status from the Ontario Securities Commission, and then we launched a first mortgage fund.
Well, that is actually incredibly unique. You know, most firms you meet with, they're usually one or the other, and maybe don't always have the capability to stretch and play the world. But that sounds like a very unique position for you guys, and surely something that has served you well, both over the previous years and likely over last year, and none more than ever. You know, let's maybe talk about the different portfolios a bit, and it's a good chance to kind of reflect on 2020. Give us a bit of color. You know, how did those discussions start out last year, and maybe a bit of a view on how they're evolving into 2021.
Okay, well, one thing I'm going to do is I'm actually just, if Eric, if you don't mind, I'm just going to share my screen. I just want to provide, prior to that, just a quick overview of the mortgage fund, because that is what is on your platform here. So just bear with me here while
Certainly.
I do so. Bear with me while I do so here. Okay, so I think everyone can see that screen.
You got it.
So as I had mentioned, we launched this mortgage fund right at the end of December 2019. You can see on that screen. One thing I should mention is when this video is shared publicly, and we're going to share it on LinkedIn and other social media, we are going to leave a link to this presentation so people don't have to take notes, etc. Essentially, we launched it at the end of 2019. We're targeting $100 million. We're currently at about $31 million. It's a first mortgage fund only, and it is only in markets in which we operate, both on the buy and lending side, which is urban markets in Ontario. It's pretty much everything but a private home. It's commercial, office, industrial development properties. It says there 75% loan to value is the maximum loan to appraised value. And this is actually our most liquid investment in our office as well. Because it's a mortgage trust, the capital is redeemable upon only 30 days written notice. And we take a minimum of $50,000. Just moving along here, you had mentioned about us being on sort of both sides of the business. We see this as a real distinct competitive advantage with us. Lending is not theoretical to us. It is likely that we've probably owned similar assets or currently do. I mean, there's a line in here that says existing assets of the firm include office, industrial, commercial, and land developments. We also have 5 active residential developments at different stages of development ongoing now in Southwestern Ontario. We're also in the co-working business. We have a co-working operation. We see that as a distinct advantage because we can relate to the borrower because in fact, we are the borrower. We are a borrower, whether it's banks, near banks, or lenders such as ourselves. We sit in that role as the borrower, so we can relate to them. And I think they can therefore feel a greater comfort with us, and therefore we can get real deep relationships with these borrowers because we have value to add besides just lending money. Because we are a local business, I use a little term there called feet on the street. I mean, that's been around for years, but every asset we own or have a mortgage on is essentially a 1.5 hour drive or less from our office, right? So very, very local in nature. A key to our lending is we like to lend where people add value. It's not enough for us to say, look, there's enough security, here's some capital, therefore, we're well secured, therefore we're prepared to make an advance. We want people to be doing something to their real estate, adding value, refurbishing an asset, getting approvals on land, et cetera. Why? Because the inherent value of the real estate will therefore go up. And lastly, where I think we have a little bit of an advantage is because we're on the buy side and we have people on the buy side of our business, they sort of double as an in-house resource for our lending business. And that's a competitive advantage for us as well. And just the last slide I want to share is sort of the performance of the fund over the last 1.5 years. You can see in the slide here that I show the 2020 and the 2021 performance to date. Let's focus, I guess, on 2020. It's a full year. We provided distributions to investors of 8.65% net of all fees and expenses. And I think sort of the second last line there is pretty important. Leverage. This is not a leveraged fund. And so we're obtaining this yield without significant leverage, and that should provide people with comfort as well. So I'm going to stop sharing the screen now, telling the audience that this entire presentation will be available. There's more slides. You can read it on your own time. But I wanted to address your question about 2020. When COVID hit not when it hit, but when really we shut down and we locked everybody in sort of the end of March, early April, I mean, we just stopped lending. We stopped buying. We frankly did not do much except for maintain our existing portfolio of assets and our mortgages from probably April to about September. Since then, we've slowly been lending again, very cautiously. And we've sort of been averaging 1 or 2 mortgages a month. So we're growing slowly. The market has changed. One significant aspect is there's a lot of money out there looking for a home. And the challenge with a lot of money is a borrower that might ask us for X amount of dollars that we don't feel comfortable, they will find that capital. I'm fairly certain of it, having, worked this last year or so in this market, that capital will have to be deployed because certain lenders have the mandate of they must get capital out, because if they don't, they're going to have to terminate some staff, et cetera, downsize. And it can be challenging to compete with that. What's important for us is to stay true to what we do. We currently have no defaults in our mortgage fund. There are defaults from time to time. That's just the nature of being in this business. But right now we don't have any. And, it's important for us to stay true to what we do. We're a cautious lender. We're a first mortgage lender only. And, we want to be in that value add space, right? So, it requires us to be patient, frankly.
Well, and it's a very interesting perspective that you and the team come from, because you have visibility on both sides of the street, not just the lending side where you have, presumably rampant demand and pickup. You're able to kind of gauge and effectively, I think, bridge both sides and use that information to make sure that you're making the most intelligent and intuitive decision based on the strategy of the firm as well, which I think is an incredible benefit for you and the Downing Street group.
No, absolutely. And like I said before, where I also think it's unique is the type of discussions we're having with the borrower, even post-funding. I mean, it's not a matter of, hey, just give us an update. It's, guys, let's meet, let's talk about it. Let's share what we're doing on a site. Perhaps it's a number of municipalities to the west, but frankly, it's the same. It's a similar transaction. What are you doing? Who are you using? Which consultants are you using? You know, who do you use as a planner of this particular issue? So we collaborate with our borrowers, which I think is, you know, also somewhat unique.
Well, you're using all of the resources ultimately available at your disposal across the spectrum. So it's smart, I think. You know, the world's changed a bit since September 2020, and, you know, we're maybe still working from home now, but I think line of sight on return to offices, hopefully with the vaccine rollout later this year. How's the discussion changed through 2021, the start of the year, and where do you see things heading in the coming weeks and months ahead? How's it changed?
Well, with respect to going back to the office, I mean, I can sort of, I'm going to pivot from lending for a second here. I'm going to talk perhaps about even our portfolio. So we have a co-working operation that we actually launched in the fall of 2019. It ramped up, small facility, 11,000 feet only. It's in here in Etobicoke. It ramped up to well over 50% occupancy very quickly. But then all of a sudden, of course, you know, we were locked down, no one came back. And, but since then, actually, it's that particular facility, now we're closer to 70% again. And the reason I'm mentioning co-working, because co-working is a lot different than, let's say, a standalone office. Eric, when you go back to your office, you know your staff, you guys have a relationship. It's not strangers. Co-working is a business with, frankly, strangers, people who you don't know. You don't know what they do on the weekend. You might not have common friends. You might not talk on the weekend. And the fact that people have come back in that sort of environment is very encouraging for us. The other thing with our portfolio is all of our office tenants, frankly, are single-story office tenants. So we don't really, I can't experience what some of the landlords have, you know, with certainly the office towers downtown with respect to having an elevator and just not being able to provide an environment yet for people to frankly go up to their offices. But, you know, I'm encouraged by the fact, I mean, I have family members who are vaccinated. You know, we can see the rollout throughout the world is happening quickly. And I hope there's some semblance of a return to normal because, you know, I do believe in the concept that that mental health has been deeply affected by this. And I know people like to collaborate. We're human beings, we're social creatures. And I think that things will change. There'll definitely be more people working from home, but I think there's many businesses that require collaboration, right? And people are social. So I think I'm quite confident that it will come back.
I'm with you on that one. It's one of the things I miss the most. You know, some of the casual conversations, the creativity, the things that, you know, are harder to do on screen than they are in person, where you can kind of read a whole room pretty easily. We got an inbound question from the audience already, which is great, that I thought might fit well into the dialogue. On the fund itself, you know, which other mortgage lenders do you see yourself competing against? And the second part of that question, you know, do you see the Canadian banks as competitive, or are they generally focused on different types of projects from you and the Downing Street team?
Okay, well, I'm gonna start with the second question. The banks are definitely in a little bit of a different space than us. I mean, they're lending, they're lending, you know, at a different risk profile than we are. Banks will lend, for example. So I'm actually in my office today for this webinar. However, we have a bank as a lender, but we're a fully leased building, right? So someone with a fully leased building is not coming to a private lender paying 7, 8, you know, sometimes 9% per annum. They don't need to. So the banks are really lending where, frankly, or we're lending where the banks don't. So we don't see them as competitive. With respect to, they're often our takeout, because we might have a land loan where someone is, it's a development site and they have adequate sales in place, and therefore the bank lender is the takeout lender for our land loan. With respect to competitors, we have a lot of competitors, and I think very highly of our competitors. I can mention many by name. There's Firm Capital, there's Marshall's Air, there's Cameron Stevens, there's Terra Firma. It's so on and so on, and it's a big space, and there's a lot of space for many of our firms. I think what happens a lot is, from a borrower's perspective, is the borrower develops a personal relationship, and if they have a personal relationship with me, a quarter point here or there in the interest rate is not going to make a difference. Just like if they have a relationship with one of our competitors, I don't see that, as a means of sort of taking away business from our competitors or vice versa. I think what is happening though, where there is some pressure is, private lenders are reducing their rates because there is a lot of uninvested capital out there. And that uninvested capital needs a home, because certainly if it's in a fund, it's earning zero and it's dilutive to the returns. So, that can be a bit of a struggle for us in the sense that, we don't want to stretch. We don't want to go beyond what we're comfortable lending. So we have to now convince the borrower that we're the right lender. We're the lender that might show a certain amount of patience through a complicated problem, and that's just the nature of the lending market right now. There's just a lot of capital.
I like it. And it's a lot of things that harmonize well. You're a solution provider. It can be nimble, agile. It seems like as a company with the track record and knowledge and capability you guys have, it can create quite an interesting environment for you and for your clients to work in. I did just post for everybody's reference in the chat box the DealSquare link and login. So if you're an advisor in the group, you can head over on there after the call is finished. If you don't have a login, you can ask for one and check out the Downing Street deal as you're working through it. Marc, give me a bit of a view. You mentioned you're working on some pretty interesting stuff. Where do you start to see the opportunities emerge now as folks are getting used to getting outdoors again and coming out of their homes? Where are you focusing most of your time and energy these days?
Well, we're focusing. I mean, again, I'm going to focus on the lending side because that's what we're here talking about. I mean, we're focusing a lot of our time, frankly, right now on origination and direct outreach to borrowers and brokers. There are potential, let's say, even assets similar to the one that I'm in, refurbishment of assets where borrowers have perhaps put that off, given what's happening to their business, what's happening with respect to their ability to actually allocate capital for this right now. As I see that loosening up a bit, we want to be there, ready, frankly, to fund in many cases, provide quick funding solutions for people. So we want to have those discussions and be ready. Something else that we're looking at right now is how to get a greater outreach with the brokerage community. The brokerage community is very important for all of us private lenders because, frankly, they are a source of deal origination for us. So that's something else we're focused on. I mean, that's our main areas on the lending side right now. Aside from maintaining relationships with existing borrowers and hoping to grow those. For lack of a better term, those accounts somewhat, and make sure we get the next deal as well.
Makes perfect sense, and it's actually maybe a good question. How are you positioning Downing Street into that brokerage community? We all know they're important. They represent a whole wealth of individual families and investors, and that's ultimately the channel you're focused on and working with through the DealSquare platform. How are you positioning the fund and Downing Street into the portfolio for those advisors as they're looking at putting their clients into the mandate?
Well, I'm going to deal with the mortgage brokers, then I'm going to come back to the wealth managers. So the mortgage brokers, what I see as the biggest difference in our business in the last 18 months is the fact that we went from being a syndicated mortgage lender to having a fund, which is captive capital. The difference being we get in meetings with borrowers and they might say, hey, do you have to raise the money? Now, hey, do you have to raise the money? What they're really asking is, will you be successful at raising the money, right? So, I mean, now that's not something that we concern ourselves with. We have a fund. The fund can fund as quickly as we can get through the due diligence materials and as quickly as a borrower can provide those materials. And then, of course, as quickly as both a borrower and lender solicitors can sort of paper the file and put security in place. So to the mortgage brokerage community, what we're saying is we can fund much more quickly than you've dealt with us prior to December 2019. And I think to certain brokers that we've done transactions with in the last year and a half, they can see that, right? So that's a message we're definitely putting out. With respect to the advisors on the DealSquare platform, I mean, now I'm speaking directly to them. We've had a number of advisors subscribe. And we appreciate that. We would certainly like to get more. And again, Erik, I appreciate you and your firm, and you guys provide us great support and even giving us this opportunity. What I would say to those advisors is give us a shot, call us, call me up directly. We are, we're a small organization, so you will deal with me or a couple other counterparts that are in the most senior positions with our firm, and that's another point of difference being a small boutique firm. Also, capital is redeemable on only 30 days notice. If you don't like what you see, redeem, right? And that's a way where, prior to us having a mortgage trust and only having sort of a limited partnership, we couldn't accept registered funds, and therefore we had a longer sort of lockup period. It's now 30 days, so people can sort of try us out with a small amount of capital and redeem if you're not satisfied, right? But speaking to the wealth managers, I would welcome their calls, because it's definitely something we want to grow.
I love it. And, for the advisors, you've really made it as easy as possible for them to get into your point with the fund. The actual process of purchasing, and if you don't like what you see, to your point, redeeming, it's using the ticker symbol format, the traditional equities trading system you'd otherwise use to buy stock or ETFs listed on an exchange. You type in DSPMF, sign marks, subdocs, and you're going to see it sit there in your portfolio and see that tracking moving forward, both for the advisor. I think it's a huge benefit, and for their clients ultimately. So commendable to kind of get it set up and make it as easy as possible for the financial community in Canada to get their hands around your product, meet you, learn more, and certainly something that we would encourage. Mark, I've got two questions in from the crowd, both kind of fit with the strategy as well. Do you have any plans to work with second mortgages or any kind of hybrid mandates in the future?
Okay, well, it's an interesting question. For this mortgage fund, again, which is on your platform, the answer would be no, because it is a first mortgage fund, and we got to be true to our investment parameters. We do provide the occasional second mortgage as a syndicated mortgage, which would not qualify for our fund. So, the answer is not on DealSquare, not in our mortgage fund, but we do the occasional syndicated second mortgage, yes.
Brilliant, thank you. And one more that kind of speaks a bit to the residential portfolio side of your business. Do you see the fund possibly entering multifamily value add space and competing with funds like Starlight? Where do you think you see the future going there?
Well, we do look at multifamily with respect to providing construction finance. So we are in that space from a lender anyway. We're just not in the single private home lending space. So we are active in the multifamily space.
Brilliant, thank you. Related, we're looking at a lot of different ways to play real estate. You were kind enough to share a bunch of material about Downing Street and really kind of open up about the firm, why you're different. If we look at our advisors in the crowd and kind of their ongoing philosophy, if there's one pearl of wisdom that you could drop into the back of their minds about, hey, why should I give Downing Street a bit of a look? Where would you kind of start that conversation off?
Well, where I would start it off first is the fact that I would ask people to call me directly, right? So it's not we don't have an investor relations group in our firm. We have me and one or two others, right? So we're very accessible, and you could speak to the principals of our firm. That's one differentiator. The other differentiator is, I recommend that people go to our website, look at the various verticals we're in, see some of the assets we own. Definitely follow us on LinkedIn, because that's where we share, frankly, all of our updates. And you will just see a very broad, a real estate company that owns a broad range of asset classes in real estate, and frankly is very specific to what I would even say Greater Toronto Area, Golden Horseshoe, Southwestern Ontario, like I said before. And again, we really have comfort on the assets that we're lending on, because again, I'll even talk to something else you said before. You mentioned our competitors. We borrowed from our competitors because we are in the space of requiring to borrow from the private lending community, right? So that's also a point of difference. When people ask me about my competitors, I think of them in a very different light than perhaps someone else who's in the lending business, because they're my lenders, right? So it's, we co-lend with many of them, frankly, on files as well. So, from our perspective, we're just in a lot of different areas of real estate. We have a lot of in-house expertise, and that helps in the lending space. It really helps you understand an asset. When someone puts up a pro forma, and you can sort of compare it to your own asset that you might have sold 4 years ago, or something that you're looking at, you can sort of brainstorm with the borrower in a different way. Like, it's, again, we have no defaults. We had no defaults during COVID. There's always defaults. We're in the private lending space. There's always going to be defaults. However, the fact that we have a low amount, I think that speaks to how sophisticated we are as a lender.
It makes sense, and it's an incredible bit of progress that you and the team have been delivering on, especially over the last year, to make your way through it. No, of course. It's hard to believe 30 minutes can rip right by as quickly as it does. A sign of good conversation. But Marc, if there was one thing to leave with the audience we have with us today, a combination of advisors and maybe some out of the investing public, what would be that last kind of parting word from your end before we sign off today?
Well, the last part would be get in touch with us, follow us on social media, get in touch with us, and give us a try. Again, this is a liquid investment. It's not a long-term commitment. I hope that it becomes a long-term commitment, but at least it allows people to sort of test drive us, knowing that if they are dissatisfied with any aspect of the investment, they are open to redeem on 1 month's notice. So I don't see it as a great risk, except for, of course, the risk of their time to actually subscribe.
That's a brilliant way of positioning it, Marc, and thank you again. To our audience, we appreciate you taking the 30 minutes over lunch to chat with Marc and I, learn a bit more about Downing Street, the good work they've been doing as a firm on the street. In your backyards, bluntly, here in the GTA, to develop and fund projects that you'll probably have the chance to drive by in due course and maybe haven't recognized them to date. So I do hope you'll take Marc up on his offer, reach out, connect. If you can't find him on social media for some reason, I know he's all over the place, loving the pocket squares these days, Marc. I'm sure you can find him on LinkedIn, reach out to the team and I here at DealSquare or Neo, and we're happy to put you in touch. Quick reminder, in your chat box, you've got the DealSquare page. Ticker is DSPMF. And feel free to reach out, connect. Marc, thank you very much for your time today and for sharing the journey with us and our audience. We're wishing you all the best over the coming weeks and months, and look forward to working with you and the team more in the year ahead.
Thanks, Erik. And again, I've said it before, we appreciate you and your team because you're big supporters of us. And I thank you very much for that.
100% our pleasure, Marc. This is DealSquare and Downing Street signing off for today. Thank you very much for your time.
Thank you, everyone.
Bye-bye.